How art may become a casualty of US-China trade war. The United States has started a trade war with China, and art is caught in the crossfire. The administration announced this month that President Trump had proposed duties as high as 25% on $200 billion worth of imported Chinese goods to encourage China to change its harmful policies. The proposed tariffs, initially set at 10%, followed two earlier rounds of penalties. The latest list of targeted Chinese goods ran to 205 pages. It included sandblasting machines, eels, fresh or chilled hats, and, at the bottom of the last page, paintings and drawings executed entirely by hand, original sculptures, and antiques more than 100 years old. The tariffs would apply to all artworks that originated in China, regardless of how they entered the United States. That means American buyers could be required to pay 25% more for a Ming Dynasty bowl sold by a British owner at an auction in New York, as well as for a painting by a young Beijing-based artist at a gallery in Hong Kong. The announcement has caused outrage in the art world. James Lally, the founder of J.J. Lally & Company, a dealer based in New York that specializes in Asian art, said that the proposed tariffs were a matter of great concern to museums, collectors, curators, and dealers worldwide. It will have a chilling impact, he said. It will quickly reduce the market for Chinese art in America to a backwater. Professional organizations like the Art Dealers Association of America, the Association of Art Museum Directors, and the British Antique Dealers Association have also stated their opposition to the proposal. Dozens of companies voiced concerns to trade officials during 6 days of public hearings in Washington this past week, many warning that the proposed tariffs would hurt American consumers. Peter Tompa, a lawyer based in Washington, represented two lobbying groups that work on behalf of museums, dealers, and collectors at the hearings on Wednesday. Mr. Tompa said a member of the trade committee asked him one question: since art is a luxury item, wouldn't people pay more? Tompa said he had told the committee that the main problem was slow turnover of inventory in the art trade, and that a tariff would mean greater capital outlays by dealers. Dealers will need to pay up front, but it may take a while to make good, he said, adding that dealers also had to cope with a recent Supreme Court decision to allow internet sales to be taxed. Sotheby's, Christie's, and the Asia Week New York Association of Dealers said in a written complaint that the United States, not China, would be affected most. Imposing duties on Chinese origin art will not impact the trade practices or policies of China, since the vast majority of such artwork is imported into the United States from countries other than China, the complaint read. And the United States market is small compared to the amount of Chinese art and antiquities sold in mainland China. Last year, $7.1 billion worth of Chinese art and antiques were sold at auctions across the world, according to a report published this month by ArtNet. Of these sales, $5.1 billion came from auctions in mainland China, where the operations of foreign auction houses are restricted. $408 million came from the United States, though that number was up 62% from 2016, compared with a 6% increase for China. Dealers have pointed out that adding a 25% duty to the fees known as the buyer's premium could deter both buyers and sellers of Chinese art at auctions in the United States, reversing growth in that sector. It's not punishing the Chinese, it's punishing the Americans, Giselle Croze, a specialist in ancient Chinese artworks, who is based in Brussels, said of the proposed tariffs. The international trade will go back to London, Paris, and Hong Kong. In recent years, sales of the finest Chinese antiques have been dominated by Chinese dealers and collectors. The market for international contemporary art, on the other hand, is dominated by American dealers and collectors. They are also alarmed by what the impact of a proposed tariff would be on the Chinese artists they sell. One of the strengths of the American economy has been it's a free market for all, said Jeffrey Deitch, a leading New York dealer and curator. It's made New York City the world capital of the art business. To jeopardize this situation could have very serious consequences. Next month, Mr. Deitch is set to open a new gallery in Los Angeles with Zodiac, a museum-style exhibition of works by the Chinese artist Iyy, who currently lives in Berlin. The centerpiece of the show will be the 2013 installation's tools, comprising nearly 6,000 wooden seats that the artist salvaged from across China. previously seen at the Gropius Bau in Berlin in 2014. The work is to be priced at $2.9 million. The proposed import tariff would be determined by the location of production, not the nationality of the person creating it, the Office of the United States Trade Representative said in a statement he mailed in response to questions. Mr. A's works, having been produced in Germany, would be exempt from any penalties. The situation would be different, however, for works from contemporary artists with studios in China. The New York gallery Pace, which has branches in Hong Kong and Beijing, represents no fewer than 14 Chinese artists. On September 7, its space on West 24th Street in Manhattan is to host an exhibition of 11 new works by Zhang Zhaogang, who is based in Beijing. The artist's haunting bloodline series of family portraits is much coveted by both Western and Asian collectors, with large paintings selling for as much as $12 million at auction. The show should open before any tariffs are imposed on imported artworks, but Mark Glimcher, the president and chief executive of Pace Gallery, is still concerned. It's like putting a tariff on stocks. If the price of an item is significantly altered by a tariff, the market will look elsewhere, Mr. Glimcher said. Purchases in New York are already subject to a local sales tax of nearly 9%, he said, adding, if we had to raise the prices by 25%, it would be difficult to sell the show. Any protection of the U.S. art market will have the opposite effect, Mr. Glimcher continued. It does nothing positive. But the imposition of punitive import tariffs would affect more than the art market in the United States. It would also make it difficult for Chinese artists to exhibit their work, diminishing cultural exchange. It's about more than the money, said Mr. Deitch, a former director of the Museum of Contemporary Art in Los Angeles. This is where the consensus is reached about what art is important. If you're a Chinese artist, Mr. Deitch added, do you want to show your work here? Do you want to be in the center of the international art discourse? So far, the Trump administration has gotten low marks for its concern for cultural matters. But, over the coming weeks, the art world says it will work to convince lawmakers that, if the United States wants to wage an economic war with China, taxing art would be a self-inflicted wound. The CEO of one of America's largest crafting stores is mounting a furious campaign against Trump's tariffs. President Donald Trump is considering tariffs on another $200 billion of Chinese goods. Many U.S. companies are worried about the increased costs from the tariffs. One of those businesses is Joann, a leading fabric and crafting retailer. Joann CEO Jill Soltau spoke with Business Insider about the tariffs' downsides for small businesses and how her company is responding to the possibility of more. President Donald Trump could be about to take the trade war with China to a new level, and one U.S. CEO is worried. The Trump administration is considering either a 10% or 25% tariff on $200 billion worth of Chinese goods, causing alarm for many businesses that rely on goods from China. Hearings on the new tariffs, which are being pursued under Section 301 of the Trade Act of 1974, took place in Washington, D.C. Tariffs could be imposed as soon as next month. One of those businesses is Joann, a fabric and craft retailer that boasts more than 850 stores around the country and over 22,000 U.S. employees. In an interview, Joann CEO Jill Soltau told Business Insider that the next round of tariffs posed a real threat to not only her company, but also many other U.S. businesses that rely on Joann. Many of the textiles, yarns, and fabrics sold at Joann stores that are sourced in China are on the proposed list of goods that could get hit by the next wave of tariffs. These goods, Soltau said, are used by many small U.S. businesses and crafters to create final products. Increasing the cost of these materials would put the squeeze not only on Joann, Soltau said, but also on the small businesses that rely on those items for their products. The company says that if the tariffs go through, 42% of all of the goods sold at Joann stores will be subject to tariffs. Soltau has been on a media blitz to try and raise awareness about the possible downsides of the tariffs, including speaking at the Section 301 hearing in Washington, D.C., and creating the Made in America tax website to highlight the dangers of Trump's tariffs. The Joann CEO spoke with Business Insider on Thursday to talk about the tariffs, how Joann is responding, and how small businesses may get the short end of the stick. Bob Bryan, When you looked at the list of items that were on the Section 301 list and saw some of the goods that you use in your stores, what was your initial reaction? Casualty, we looked at it and, as we digested it, the conclusion we came to is that these tariffs would unintentionally create a tax on raw materials that are imported into the United States so that our customers can create projects and products that are made in America. It's small business owners that represent over 20% of our customer base that we first thought of because of the amounts that these tariffs are implying, anywhere from a 10% to 25% increase in cost we will have to share in the cost with our customer. And that's what really causes us the greatest concern, is that people like Heather and Diane, who have this great business out of Hector, Minnesota, they design, sew, and sell these fabric kitchen appliance covers that their customers then buy. With their costs then going up, they'll have to raise their prices to their customers, and then their customers will really have the option to really walk away and buy something that's foreign, made out of largely the same materials, but at cheapest prices, because those finished products won't have a tariff on them. So that was our first response: wow, this is really unintentionally creating a Made in America tax. Brian, what percentage of your goods do you expect to get hit by the tariffs? Casualty, about 70% of what we import is made in China. Editor's note: a Joanne spokesperson clarified that while 70% of the company's total goods come from China, only 60% of those Chinese imports would be subject to the tariffs. We carry about 40,000 products every single day in a typical store, and much of those products come from China, and it's how we, as a craft and fabric retailer, have been able to supply such an incredible assortment to our readers and be the strong, growing, profitable retailer that we are today. It was really in the 1970s when China emerged as a manufacturing country, and we became part of a global economy. For instance, our fleece fabrics, we sell over 40 million yards per year, and it has always been manufactured in China, especially at the quality standards we require and the quantity that we need. Brian, so it's not a case where you shift your sourcing or supply chain elsewhere to work around the tariffs? Casualty, it would be very difficult. In that example, the capital requirements are very intensive for an aspiring business person to want to set up a fleece manufacturing plant somewhere else. Even if that reached that first hurdle, it would probably be 18 months before they could be up and running, probably 3 to 4 years before they could actually get any kind of scale. I don't think we would see full production requirements inside of a decade. So a lot of hurdles there for someone to scale. Even after the couple of years it could potentially take, if someone had the money, there would be a lot of challenges for our customers. Brian, have you all estimated the exact cost increase for your company if a 10% or a 25% tariff goes through? Casualty, just the sheer fact that the 10% to 25% increase would be what it is if these tariffs pass. I do not believe that Joanne could singularly absorb this, nor could our customers, so we would have to share in that effort. We are looking at every possibility on how we can manage through this if these come to fruition, but our biggest focus right now is creating the awareness with our administration. We support the administration's efforts to level the playing field with China and have a strong trade agreement between China and the U.S. We know their intentions are good, and we support that. But we don't understand how fabric and yarn and scrapbooking supplies have made it onto a list that's really been more of a high-tech debate in relation to Made in China 2025. Brian, a number of Trump administration officials have compared the tariffs to a diet where the U.S. needs to withstand short-term pain to get the long-term gain of better trade deals. What are your thoughts on that analogy? Casualty, the third component is that it's making a Made in America tax. We sell the raw materials, and the products that are being developed through these materials are in fact made in America. That's the critical aspect for us and our customers, and our employees. We are supporting manufacturing in America, with the small businesses with the organization that are creating for donations. Over 22% of our customers are seniors. They live on a fixed income, and they are doing this as part of their livelihood. They've earned the right to do what they enjoy in their retirement, and for them to pay for these things, that's really what we're focused on, is spreading the awareness. Brian, A lot of other US companies have said that they may have to deal with the increased costs by cutting costs in other areas, like labor, so laying off employees. Is this something you all have considered? So we are looking at every opportunity we can so that we don't have to go there. Again, the sharing of the cost between our customers and ourselves. In terms of how we can work smarter, how we can negotiate costs with the makers we are engaged with. That's really the areas and options that we're looking at, and that's really where our focus is before we would reduce our workforce. Brian, another response that businesses have had is to put major investments, such as expansions, on hold. Is this something you all are considering? So we are evaluating all of that. As I mentioned, we are a growing, thriving, profitable company. We've opened over 120 stores over the last 5 years and added over 2,600 jobs into the U.S. economy. We'd like to continue at that cadence, but at this point everything is on the table, and we're just being smart. We're watching it, but, as I mentioned, our focus is bringing to the attention that we don't want to place a tax on goods that are made in America.